Okay, cool. So, all right. So, like I was saying, we're gonna rap about taxes, and it's just me and you. Like,
Okay.
and I was like, man, I should film it. So, this is a real conversation, guys. I'm not a CPA. This is not financial advice. All right. I'm not talking tax exacts, just the concepts and what I've experienced. Okay. So, and potential stuff. And the tax benefits of being a home-based business owner, right? So we were just rapping about taxes. You wanted to know, you're an employee. You want to know, okay, how does this really work? It's like this. So first I'll give an example. My friend Jess, I think the number is 39,000. And, let's just say, here, will you close that door?
Yeah.
We're about to leave.
Alright.
Okay, so at 39,000, he was, let's just say, I don't know the exact percentage, but he was getting taxed, right? And then he got a raise, and man, he not only had to pay way more, but it was like he was actually he lost money, right, by getting a raise. It was nuts. Because at 39,000, let's just say hypothetically you're taxed at 33%. Usually it's like, man, half my check is gone, you know. So even at a third, that means you'd be paying 13,000. All right, I should grab my. Oh, you have my phone. But then he got a raise, and it went to 45,000. He was making 45,000. But when you right past 39,000 is the next tax bracket, and you're taxed a little bit more, like 34%.
Holy smokes! Wow.
Right, so he made more, but he's taxed more, and so he was paying. Right at the all through the year, and then at the end of the year they're like, we want more money. And he had to pay an extra 3,000 in taxes that next year. So it's almost like, working backwards. When people get 2 and 3 jobs, like, think about it. Do you know anybody that's wealthy they're not rich yet and they're really busy, but they're still grinding, they're still month to month? Is because they're doubling and tripling their tax burden. When I used to get my check and I'd do overtime, they would just tax me harder, and I worked all that extra time, which wasn't even worth it because the check was barely more, right? So it's really bad news. You can never create wealth without getting your taxes down to a legal minimum. That's what the government says. So legally, I'll show you kind of the difference. Okay, so if you make, ballpark figure, what do you make?
I'll say I'm making right now 55 a year.
Okay.
Salary, yeah.
55?
Yeah.
So, do you know how much taxes you pay approximately for the year or per month?
I said per month, it's around like $1,000, $200 a month, or probably more. I get paid once a month, yeah.
1,000 a month?
Yeah, it's around like.
At least.
No, it's like 1,400 a month. I remember now.
Yeah. Something like that, right? Like, it's 14 times 12. That'd be like 14. Yeah, that sounds about right. I mean, we should get a calculator. Okay, 14 times 12. 8, 2, 4, 1, 1, 6, 8. 0, 0. 16,000. So 16,800, right? So 17,000 in taxes. Okay. So 17,000 in taxes. This is just ballpark, guys. I'm not, financial advisor or anything like that. But at 55,000, you're taxed maybe somewhere ballpark 17K. Okay, and that's just like Chris Rock was saying. You don't pay taxes; they take taxes, right? Like, you don't have a say in what you pay in taxes. It's gone before you even get the check. You don't have a say because employees are penalized for being employees because they're not the business owners that are creating the economy, building America, right? Like, America's built on small business, so they give business owners the tax breaks so they can get breaks, so they can give jobs and create economy and all that stuff, right? So tax benefits of being a home-based business owner. So employees don't have one. As soon as they get one, watch what happens. You have write-offs, overhead. It's called overhead. See, right now, having a phone, having a laptop, you don't get paid back for that. You just kind of comes out of your pocket. When you go on a vacation, you don't get paid back. It just comes out of your pocket. When I go on vacation, it's going on the business card. I write the whole thing off, 100%. It's a business trip. See, that's why I can't claim financial advice or anything. Don't listen to me, right? Like, but in my experience, you know, like my laptop, you gotta have, you know, and you gotta talk to the right CPA, a savvy one, right? The ones that you gotta watch out who you're taking advice from, because you're gonna get what you pay for. With you know, a phone, you gotta have a phone to do business. You have to have mileage and gas in your car to do business. You have to. These are all costs of doing business, right? So okay, let's say that you do a bunch of mileage going to Utah and back. Now you have your little home business, right? You started your little side project, a home business. You're a sole proprietor. That moves you into a 1099, not a W-2. A W-2 stands for warning twice. Get out of there as fast as you possibly can. That's what a mentor told me. And then, you know, you're working with other companies and stuff, they'll send you a 1099 and they report these taxes. So say you barely make from your side project a couple $1,000s. Like maybe all year you barely made $1,000. All that work, right? And you're like, man, I only made $1,000. So your total income for the year is not anymore 55, it's 56. Right? So now you'd have to pay taxes on that because they reported, hey, we paid this guy $1,000. So now the IRS knows. But what most people don't understand, that just by starting a side project and even taking a loss on paper, see, at 50 something cents a mile, if you drove say 10,000 miles for business this year, that's like $5,000 in write-offs. And you can even, like, in certain cases, depreciation of your equipment, all that stuff. Maybe you bought a laptop. How much is a laptop?
Let's say like $2,000, $3,000.
A good Mac is like $2-3 grand.
Yeah, $3,000.
$3,000.
Yeah.
You need probably need a camera, nice camera to maybe with today's business, YouTube and all that stuff. You need Wi-Fi, your bills. You need equipment. Traveling, hotels. I mean, literally, you know, I would do, like, seriously, business lunches, seminars, workshops. It depends on what you want to do. I'm not gonna, you know, tell you all the specifics, but now look at that: 5, 8, 10, 11, 18,000. That's not counting. I'm taking out so many write-offs that you can potentially have, like you know, other. You can write off square footage in your house if you're like an office like this. You can we write this off because it's a cost of doing business. You can literally write off parts of your house if you turn that into an office. A ton of stuff like that. I'm being stupidly conservative. Okay, so that is your costs of doing business. Okay, the government says you can take a loss in your business for the first three out of 5 years. No more than that, you know, per 5 years. But for the first 3 years, because they know it takes time and money investment to get a business rolling. You're not in the black usually in business for 5 years anyway. You've got to pay off your mortgage, insurance, paperwork, employees, banks, investors, you know, all that kind of stuff. So if you made 56 and you took a loss on paper and you tracked it all and you wrote it all down and put it on your credit card, right, and you had a bank account and you're putting, and that's all on the credit card, you took a loss of 18,000. So you made 1,000, but you spent 18,000. What's your total income? That's like I'm really bad at math. So 4, 1, 6, 8, $38,000 total income. But see, you have been paying every week or every month or every 2 weeks out of your check. It's already gone all year. You've already paid it. You've already paid all that money. But if you do the taxes on 38,000, you weren't supposed to pay on 55,000 or 56,000. You took a loss, remember? So your total income for the year was 38,000. You're supposed to pay taxes on that because that was your total income. So at 33, a third of that would be 39, 13,000. So no, you weren't supposed to pay 17,000. You were supposed to pay 13,000. So I overpaid. Give me my money back, and they will happily pay you what they owe you, 4,000 back from the IRS.
Wow.
Like a check. My friend Nick, all of my friends, because he made a 6-figure income at his job. He was pissing away 20,000 a year unnecessarily. He got $7,000 back. and he only in his first year, and he only made a couple thousand in his little home business side project. But he got $7,000 check back from the state and the city back. That's why
awesome.
people are losing money every single day they don't start a home-based business. Every day they're pissing away money. So you can't treat it like a hobby. You have to track your mileage, and you get it's a little tedious, but how worth it? If you were to show somebody else how to save $4,000 back that they never would have got before, right? Like that's the only way to get ahead. So if you think about it, like from my opinion, okay, you make 56, but you only pay taxes on 38. That's why the rich get richer and the poor get poorer. The poor, it's not that they're poor, they're just broke. That can be temporary. Broke is temporary. Poor is forever. Poor habits, poor decisions, poor, daily things that they're not doing, right?
Or a mindset, yeah.
Right? So this is why the only way to create wealth is to get your taxes down to a legal minimum. That's why everybody's like Trump, all the people that are uneducated. I'm not saying like I'm not for or against Trump or any of that stuff, but one of the things that I noticed that he said that nobody got, it's like, not paying taxes doesn't make me whatever, it makes me smart.
Yeah.
It's because, see, the rich get richer because they know the tax laws. Like, so it's almost set up for us, it's set up for business owners. I pay what I want in taxes, basically, and that's just a choice. You want to be on that side, or do you want to be broke and struggling? Because it's almost set up to keep people, like, if you know the rules of a game, right? Say you're playing somebody against somebody in like chess, and they don't really know the rules of the game.
Yeah.
What are your chances of winning?
Oh, dude, 100%.
Right? So if you're a person that knows the rules, and it helps you control your life and have the advantage, what are your chances of ever telling other people? Like, it gives them the advantage, the people in control of the money, right?
Mm-hmm.
It's almost, no, you can't blame them for wanting to keep that advantage, right? They're not going to give you the advice, information.
Yeah.
So that's why I love to do this, because it literally, the education and the information and the actions every day changed my life forever, and that's why I just get to do whatever the hell I want all day, and I build these assets that just pay me money whether I work or not, 24 hours a day, and it's, it's not what you make, it's what you keep. So here's how it goes. Here's a simple way to put it. There's employees and there's business owners, the poor and the rich. The business owners, we work. Okay, let me do employees first. Employees, I used to work, right? And then then all the taxes come out, and whatever's left, that's what you get to spend, but it all goes into liabilities, not assets. Liabilities are things that take money out of your pocket. So car, it could be house and all this stuff, bills, liabilities. Things that just depreciate and don't appreciate. But business owners, here's the difference. Business owners, we work, and then we spend and spend and spend and put it on the company card and buy all the overhead and all the things we need to, and then whatever's left, that's what we pay taxes on. How insane,
wow.
right?
Wow.
And then you take that money, and there's still money left, and you do not just pay the liabilities first, you pay yourself first, even if you have to squeeze and all that stuff and put it in little things like assets, silver, gold, cryptocurrencies, all this stuff. And those are called assets that pay you money and appreciate, whether you like it or not. They pay you money every month, or they'll appreciate in value. Even my old classic car, even paintings, different things that you can keep, and they don't depreciate in value like a car, like a TV, like a house. Even though you can write off the house depreciation in real estate and stuff, but I'm just not going to go too technical on that. But things that appreciate, the things that I own and I put my money into, the dollar depreciates. I don't keep the dollar, US dollar. I keep solid physical assets and virtual assets and money-making assets that pay money and appreciate all the time. And so that's the way you have to daily be paying attention, right? Does that make sense?
Dude, that's eye-opening, man. I'm just kind of feel stupid.
Dude, And then you're like, whoa, what else don't I know, right? And then you start reading all the wealth books, and then you get powerful. And knowledge equals power equals freedom, financial freedom. A catchy word these days, elusive for most people because we stick to what we know. Our egos, oh no, I already know that. And we don't, take the time to listen to mentors and coaches that are trying to tell you, look, man, like, and it's a harsh world if you're not, really actively searching out mentors and doing what they tell you. Because mentors, there's a difference between like your friends and influences. Those are friends that tell you what you want to hear and tell you nice shit. Mentors will tell you what works. And if you don't do it, they don't waste time. There's no point in coaching. They don't coach annoying people that are gonna fight the coaching all the time, right? It's like, well, either do what I tell you because I'm in an annoying space and I know it works, or do what you know, which will keep you in the same spot, right? Mm-hmm. And like, so that's why people, the only way I work with them is if they come to me asking, okay, what do I do? So, okay, do this. And if they do what I say, then it works, and they go, oh, it does work when I listen, right? And not that I know everything, but I'm just transferring the information from all the wealthy mentors and the books and the seminars and the courses and everything that I've learned. Like, if they want a life of freedom, then okay, I will know a couple ways to get it. There's other ways, but it's like,
yeah, I really appreciate it, man. That's eye-opening right there, man. I'm like, whoa.
Dude, this is barely scratching the surface. It's barely scratching the surface. So. Okay, hopefully that was good, guys. We were just having a conversation, thought that'd be valuable. If I end up putting this somewhere, actually, because I should load this into one of the groups, Facebook groups. If someone shared this with you, reach back out to them, ask them what they're doing, and they can fill you in on some of our ventures, where I know some really powerful billionaire friends that know where the next trends are coming, and it is huge. And it's something you can work on in your spare time and things like that. The difference between rich and poor is what they do in their spare time. And
wow.
Like reading books, not watching TV, wasting time, but like investing their time so they get the return on time investment, right? The financial freedom. It's what you do in your spare time. So hopefully that makes sense. Reach out to the person that told you about this, and talk soon.
Sweet.